All right, hey everyone, welcome to another weekly episode of Visor. I'm excited to have this conversation today. It's been a bit spontaneous because I spoke with Stephen and James a couple of days ago, and we said, "Hey, why don't we get them on a call because they are involved in a really interesting asset class that you don't hear about every day." And so we just wanted to push this and have this conversation today. And as usual, in terms of housekeeping, we're recording this, so if you have to drop off, you're going to get this recording afterwards. If you're listening to the recording, feel free to join us next time live. I think it's much more interesting to have to be on the call and ask questions and be part of the conversation. So just sort of high level, I brought Stephen and James and their team to talk about investing in sports themes. Like Mike and I dive deep into private equity, private credit, where the vast majority of investments are obviously real estate. We're very focused in the US, as most Americans are. Some other asset classes across real estate, but other private equity stuff. We don't talk as much about the entertainment industry. And I think it's super interesting to dive into this asset class, which might have some alpha to the market, might be somewhat recession resilient, and also other really interesting things to talk about. So, anyway, before I dive into it and go on a monologue, Stephen, James, welcome. I'm super happy to have you guys join us today.
Thank you, Ed, and thank you, Mike. Hi, everyone. It's a pleasure to be here.
So Stephen, we're going to talk a lot about different aspects of the industry, but before diving into that, can you guys give us some background why you guys are the ones we should talk about investing in sports and what's happening in the industry?
Yeah, so happy to do that. So James and I were part of A.GAIN Capital, which is a basically a multi-fund platform that has been investing in different private equity strategies for over 30 years. Um, in the last 7 to 10 years, we've been mainly investing in let's say in the technology and the innovation space, but very much always looking at what the future is and looking at sports specifically because we've seen the innovation wave growing exponentially, and especially the last couple of years. And we kept believing that experiences was going to be a main important asset class in the future, right? And experience is entertainment, it has different fragments. And particularly, we always liked sports. So we've been looking at it for the last 7 years, analyzing all different type of markets. And because we're based in Europe, we're headquartered in Madrid, uh, we've been looking at soccer. We call it football, but soccer. And we've been looking at it very specifically because um, we've been following the regulation, we've been following the trends, we've been following what's happened in sports in the US in the last 10 years. And we've analyzed the different ways to come into this market. And we believe that uh, it's the market has an opportunity right now where our approach is to be part of that market. It's not to be, let's say, a single player that invests in one league or in one club, etc., but is to invest in a diversified portfolio that collaborates with other institutional investors that are driving the industry forward. So in that sense, we have the capacity to get access to deals. We have the capacity to collaborate with institutional capital. We understand the market. We understand how to underwrite these assets at a pure business perspective. And we also see the value outside of numbers that we know are going to continue to drive this phenomenon forward. So I hope that answers part of your
Yeah,
question.
for sure. So can you give me kind of the lay of the ground about how these sports teams, these clubs, are they all structured in a fairly similar way across the board? Like, you hear in the US about all these billionaires who are owning sports clubs and do they own the majority, the minority? Is it, the rest? Is it institutional? Is it the fans? Like, how does it, or is it every animal on its own? It's a very different type of structure.
I believe it's an every animal on its own. But obviously trends do follow and things tend to copy itself, right? We sports in general used to be considered a trophy asset, and then it moved much more into an institutional phase. In the US, that's happened. In Europe, what we're seeing is that there exists private capital opportunities, and then there are clubs that are owned by the fans. So What this creates, it's a market that's already very scarce, but then the fact that there's a lot of clubs that are owned by fans, it creates scarcity even, there's even more scarce. There's even more under supply. And then those structures themselves have different type of owners. Some assets are not professionalized yet. They're owned by a billionaire or a millionaire who has 55 to 100% of the capital, or maybe some minority stakes, so friends and family, maybe a little bit of institution. And then there's others that have institutional capital coming in, sometimes at a minority stake, but continuously chipping in and buying more until they have certain control as the clubs continue to provide a more institutional underwriting criteria and capacity. Um, and yeah, that's why all these things are structured a little bit differently. And to underwrite this, you really need to focus on those clubs that have, the capacity to be private capital and to move towards a more professionalization.
But let's go back for a second, because you said it used to be a trophy asset, and the trophy asset is not a financial asset. It means you don't invest or buy it because you want to make money off of it. You buy it because you want to say you own a soccer club or a football club or whatever. Um, and when fans own it, it sort of is on the same, square with same idea, right? Fans own it not because I assume not because from a financial standpoint they own it because hey, I'm a fan. I want to be part of this. I want to own part of this, even if it doesn't make money. Like I'm a, all in fan, for good and for bad. And so when does the financial element kick in? If these are trophy assets or fan base assets, like where's the financial aspect of it?
Yeah, I mean, I would say kind of the way I view it is sports has kind of historically been viewed as the trophy asset, which would be kind of, as you said, maybe a lower yield asset. It's very scarce, irreplaceable, and they're just very desirable to own. I guess that obviously is very different to assets which hold intrinsic value, which generate free cash flow, have high ROE, and there's clear financial returns. I guess what we're seeing in sports now, and particularly in football, is that it kind of sits at the intersection of both of these asset classes. And that's kind of what makes it structurally different. So you're seeing kind of a wave of institutional capital entering the landscape and entering the football ecosystem across Europe. And that's kind of driving the kind of more intrinsic value forward. But then on top of that, you still have that trophy asset layer. So, however well a football club is performing, you're still going to have that massive kind of social value, cultural value. There's obviously a limited supply. It's very difficult to just create a football club. So it's kind of these two levers that work together that kind of position football and sports in general in that kind of unique bracket.
So got it. And then so if obviously there's a sports club specifically and the ownership in that, and we'll talk about return or risk return profiles for that. But then you have all the auxiliary businesses around the sports. Like you saw CVC investing into the La Liga group, which is like the broadcasting arm of La Liga, right? And which is not directly ownership of any club, but it is owning rights and media rights. And assuming that's also trending now. And then you have the real estate around these clubs and everything around that as well. So would you say that if you look at the industry, the sports industry as a whole, are there specific elements of it that, from a risk reward profile, make more sense than others, like the media side or the club side or the merchandise side? I don't know, like what part of that usually has more risk return or just different profiles in general.
I think that as you correctly said, there's different places where you can invest in sports, right? We believe that investing in the league, particularly, which connects a lot of the clubs together and shares revenue with all the different clubs, specifically in leagues like the English Premier League and the Championship League in England and in the UK and in La Liga in Spain, as you correctly said with CVC. Um, that usually pertains much more to an institutional transaction, and then that opens up to other opportunities to invest. When it comes to clubs, clubs capture some of that value that's created from an institutional transaction in the league, but clubs also have all these different, let's say, revenue generating areas that are how we see it is like a football club is a center of many businesses in one place. The well run is just it can return consistent revenues, predictable revenues. And what is more valuable or not? Usually when you invest in a club, you want to invest in something that has an umbrella over all its businesses, right? So it has good contract negotiations on sponsorship. It has good commercial value. It has fanship. It has stadium ownership or rights, right? Where not just that they don't just make money on the ticketing, but now they're talking about real estate, and real estate plays a huge component in here. When you look at the asset class, and if you look at it in that way, like, okay, so these are all the revenue levers. You look at real estate and you're realizing that by investing in a football club, you're actually tapping into a real estate operation as well, right? Where you can enhance um, your value long term. The more these clubs tap into that, let's say, part of the business, the more value they'll create, and that's something that we've seen as part of the, let's say, change and growth in the sector um, from, let's say, COVID-19 uh, really opened a window, and we really noticed that very closely, really opened a window for a lot of these clubs to actually open up to institutional capital or to diversify into the revenue streams and really solidify how more they can make money besides just ticketing or player trading, right? Because they realized how much concentrated the risk was, which puts us in a position today where a lot of the revenue is being driven by many other areas and growth is pushed that way besides ticketing, player trading, championships, etc. So from then, we've actually seen growth in revenues for clubs start overpassing the growth in media rights in leagues, although that's also soaring.
Stephen, are you saying that I guess I don't know a lot about this area, but I thought in the US, if you owned a club, you owned a portion of the league, and that there wasn't some other entity that owned the league and you owned the club. It sounds like you're saying one entity owns the league and then each club is owned separately, but they're not really part of the league, ownership of the league. Is that the way it is in the
Yeah,
things?
that is the way it is. So you kind of you own the football club itself, to a varying degree, depending on your investment in the club, and then you'll receive kind of all of your broadcasting income from the league. And that's kind of divided based on merit, it's divided based on league position, etc. But there's no kind of direct ownership in the league.
Okay.
So kind
Am
of
I correct that in the US, like if you're part of the NFL, the NFL teams own that portion, like
correct.
what if you're a good team or a bad team, you still own the same percentage of the league?
It's a structurally different setup to what happens in
Okay.
football across
Mike,
Europe.
have you, Mike, you have to see that. Have you ever seen the Wrexham, the Ryan Reynolds and the other guy?
I haven't.
So,
No.
so that really shows like within the Premier League, there's like, or the British or UK Football League, there's like so many levels, right? And so each level is its own league, I assume, right, James? Like that's the setup. And so you own the team, and then you go up the leagues. In NFL or MLS, there's just one league. You don't go up or down.
Right.
And that's kind of like the structural difference, I guess, between US sports and European sports is that you have that kind of relegation and a promotion opportunity, which from obviously a multiple perspective slightly changes the dial. But then from a fan engagement perspective, you're going to see a much larger kind of natural fan base across European sports due to kind of the drama that's created towards the end of the season. And yeah, just touching on Stephen's point as well, in terms of what's really driving this change. So what's driving the change in La Liga investments in the league or etc. Like expanding your revenue streams. And actually, a lot of this comes down to really governance and regulation that's being implemented across the European kind of football ecosystem. And that governance change is really favoring institutional capital. That's why we're seeing such a big growth in kind of institutional capital ownership. Leagues now are essentially forcing clubs to run a lot more like traditional businesses, and it's rewarding those clubs that do. So I'll give you an example. In UEFA, the governing body of European football, implemented the new squad cost ratio in the last few seasons, essentially limiting the amount you can spend on your players to 70% of your revenue streams. And the idea there is to kind of limit wage inflation, overspending, and to give more kind of clubs more kind of control and financial monitoring powers. You've seen kind of various other leagues now follow suit. So in the Premier League next season, they're going to be following the same squad cost ratio. And obviously in La Liga, as you touched upon, there was kind of institutional capital was kind of embedded at a league level through the centralization of TV rights, which is essentially a large financing project where the clubs essentially forego future rights to their broadcasting income. And so what you're seeing kind of on a league level and a club level is football transitioning towards a kind of away from discretionary ownership spending and much more towards a rule-based financial governance approach. And that's kind of really changing the dial. It means institutional capital is flowing in, and it means actually the professionalization of the clubs themselves is really going, much towards the kind of sabermetrics US version of sports, and that's really, you can really notice that across the leagues.
Yeah,
So
it's made
go ahead.
just it made it for as James correctly said, it made it for institutional capital to be able to underwrite these assets compared to before, right? They become very much underwritable, and you can see it from 2018 to 2024, let's say across the board, EBITDA in a lot of these, assets has become from -5 to +10%, right? Just because of these new reforms that are happening in the leagues that are making it much more, in a way, protects the clubs themselves to be ran as businesses, right?
So I have a question then, on the more structural standpoint. When institutional money flows in and buys ownership, usually I assume minority ownership in these clubs, what level of influence does institutional capital have on the outcome of their investment? I mean, it's a soccer team, right? It's managed like a soccer team. You can't like you can have million years experience in business or in real estate. You don't know how to run a soccer team or influence. Like what effect does it have?
I think you have to ask first, like one should ask themselves, like, okay, what type of institutional capital is actually coming in, right? And then you have institutional capital that's looking to hold a large stake, which puts you in governance, right? Puts you at least in a board position or whatnot, or then a controlling stake, right? Where you can actually run the business and make sure that the discipline approach that needs to be ran in the sport, right, exists and you can follow it through as a business. Now, you can't, part of the beauty of this and part of why we believe that this is a trending asset class and will continue to go up based on the over demand from the consumer standpoint is that you cannot control the game, right? At the end of the day, what happens in the pitch happens in the pitch, and that's what people want to see. People want to see the reality out of it. But how you actually control and monetize everything around it, that's when you can really run it as a business. So you have the large chunk institutional capital, and then you have the minority institutional capital. Let's say, from our point of view, we decided to approach this market looking at a very balanced way where we could have multi-club ownership. We can have minority positions in assets where there's institutional capital involved, and then majority positions in, let's say, third, second league assets where we can actually help them, reach higher up and get a higher alpha, and with that have a little bit more of balance. So we underwrite things that are not related to the football outcome. Football outcome obviously supports and improves and helps commercial value, helps IP value, but you can underwrite assets. It's very scarce, it's very few, but like you can underwrite assets that do not depend on the outcome of football and do not depend on the most volatile businesses around it, which is like, your player book, the player trading. Um,
And
so
yeah, to touch on that, I mean, I guess it depends on your ownership style, right? You have some ownership kind of providers that come into clubs and want full control. They want to be able to influence the football decisions as well as the boardroom and have total control of operations. You know, that's been done. There's instances of that being done well or badly, depending on, I guess, what your experiences is within football. You have a lot of, let's say, American owners now. I think over 50% of clubs in Serie A are owned by American owners. That doesn't mean, you might have experience in other sports that help you kind of transfer a lot of the patterns across into European sports, but there's no guarantee on the outcome. As Stephen said, we invest in, a barbell approach between minority positions in kind of elite clubs, and then majority positions in more transformational clubs. In the minority positions, we will only enter these assets when, we have partners that are kind of very elite in their field. So one of our portfolio clubs is Leeds United, and in this deal, we are partnered alongside the 49ers, which I'm sure everyone on this call is fully aware of. And they're obviously elite in the space of kind of their disciplined capital approach. They're using all of their cost optimization and really just having a data-led structure. So I guess a lot of the concern for kind of potential investors or for kind of onlookers would be, if you have a minority position, how can you guarantee the success when you don't have control, or maybe you don't have enough kind of board seats to kind of really dictate the goings on in the club. But I guess that's part of our underwriting criteria, is that you have to be very specific with, you know, who you're going to be partnering with and what do they bring to the table.
Just to add one thing in case, you know, when James said about, over 50% of the clubs in Serie A were owned by Americans, Serie A is the Italian top league. Because each league is called differently in every country, which
Sorry,
makes it
I thought assumed.
yeah.
So I have a question then on the different leagues and stuff like that, in minority, majority. How do you guys look at ownership from there's the tier one leagues, tier one teams, versus, the lower tier teams. And I understand the trade-off, right? The tier one teams probably more expensive to get in, less meat to increase value. The lower tier teams, higher risk, but there's more room to increase. Like, how do you look at that from a diversification standpoint or any other sort of perspective?
Yeah, I guess where our strategy is, unique and is probably the only fund on the market doing what we're doing is that we're actually trying to create a kind of balanced portfolio, as I said. So we're looking at both the elite positions, having a minority, and then the control positions in these transformational. Now, I guess structures that exist at the moment that are buying kind of a multi-club ownership, they typically have one lead club, and they have like an elite asset in a top league, and then they have various other kind of feeder clubs leading up to that asset. So, although they have kind of exposure to the different asset classes in terms of size, in terms of leagues, in terms of, jurisdictions, what you tend to find is one club, i.e. the kind of top club within the multi-club structure, is, really driving the performance of the total group. And I guess where we're positioning ourselves is we're trying to kind of avoid that reliance on one single investment and give kind of comfort to our investors that actually, if one asset doesn't perform as well as we imagined, then you've kind of got this like balanced exposure across the whole portfolio. And that's both across kind of leagues, that's across jurisdictions, and it's across kind of the size of the club. Now, the way kind of European regulation works, it's nuanced in terms of how much you can invest a minority position in each league. Obviously, you wouldn't be able to take a controlling stake in two clubs, say in the English Premier League, because there'll be kind of sporting outcomes that will be influenced. So essentially, there's kind of jurisdictional changes. So, for example, in Italy, you are only allowed to kind of purchase, one club. If it's 1%, if it's 100%, that's it. It's got very strict rules. What you'll see in Spain is that's different. It's kind of up to 5%, in England up to 10%. So what we're doing is we're kind of monitoring kind of the exposure that we're allowed across these leagues to help us kind of really drive a kind of risk-adjusted return throughout the portfolio.
And I think return wise, as picking up where James is leaving it there, uh, when you have the transformational side and you're able to level up the football and really monetize the asset class a lot more, like bring real estate, develop the stadium, develop things around it. If it has the right following, you can grow it, then ticket sales are just going to go up. Um, you can trade it at, double the amount that you could trade in a league club, right? Obviously, your underlying value is a little more volatile, but than the elite club. But at the same time, that's where you can get like a juicier alpha in that sense, right? So that's why you see also a lot of people looking at transformational assets because they want to get in, they want to help improve it, and they want to take it. That's the story with Wrexham, as you correctly said, right? but they even had the media approach of it. They, two celebrities coming in and really putting them on the spotlight. That just boosted IP value completely to a different realm. And a lot of people are still trying to do that and copy that formula. But realistically, and that's part of the beauty of the sport is that, within each town in Europe, pretty much, or Western Europe, you're gonna find a fanship that follows a club. And sometimes you find that that club's actually in the third division, but they still have their 10,000, 20,000, 30,000 followers that consistently are there and they're always following it. And it creates a culture around it that the more you can expand that, the more value it creates. Um, Compared to these, let's say, elite clubs, which are ripe for growth. They're growing. If you compare how they trade compared to other American clubs or sports, there's still, let's say, there's still a gap to be filled,
Right.
right? So that there's growth even in where it's a lot safer to invest.
So if we're already talking about sort of, risk reward profiles, can you guys give us some context into what that means from a return standpoint? Like investors in these types of uh, products, what obviously there's a range, right? There's the stabilize and there's the value add if we want to put real estate terms on it. What kind of return profile, do people look at when not on the we could talk about it maybe on the fund level, but also on the investor level?
Yeah, well, I
I know
think
it's a hard question.
across.
If it's hard to answer, just like ballpark. Like, I mean, I can say multifamily real estate in the US is it's a 12 to 15% IRR. I can say development is probably 20+%. Like what is sports?
I think sports you want to be underwriting across the board. Let's say if you can underwrite at a 15 to 20%, right? Growth.
IRR? You're talking about
Yeah.
IRR?
Yeah, IRR. And that kind of, I guess it depends on what assets obviously you hold within your portfolio and how many are assets. As you said, like if you're exposed to one club, your IRR is much more variable based on sporting outcome. So I guess as Stephen touched on earlier, when we underwrite the clubs that we're looking at, you know, a lot of focus in Europe is around kind of player trading, which adds kind of like another layer of revenue to your kind of to your club. It's for a lot of clubs, it can become very reliant on this. Player trading being kind of the profit you make from selling players from your club to another club. When we, I guess, look at kind of valuing our assets before we invest, we often kind of exclude player trading totally and view it as just an upside gain rather than kind of like a core underwriting criteria. So, you might be looking at kind of beyond 15-20% if your player trading engine is also sophisticated. But kind of we always take kind of a base case when we're looking at our assets. And again, as we touched on, real estate also becomes a very compelling component. We underwrite kind of football clubs, but we also underwrite real estate projects kind of adjacent to these football clubs. So we're constantly looking at expanding our revenue streams through this real estate angle. As I touched upon earlier, in terms of your squad cost ratios, so UEFA obviously limit the amount you can spend on your squad based on the number of your top line revenue growth. So obviously across Europe, what you're seeing is a real drive to increase the level of revenue so that you can spend more on players, so that you can get better players and trade them at better value. So it's all obviously linked to one another. But yeah, I'd say base case you'd be looking at 15 to 20% over the investment period.
And
And
is
and
this some is
Mhm.
this something where are you paying out any sort of cash flow along the way? I'm guessing not. This is just where you have somebody buy you out eventually, and there's lump sums that get distributed. And then I don't know anything about your fund. How long has it been in existence? What's your track record look like? What kind of payouts have you gotten? Why why would I like I'm somebody that doesn't really know sports or get it that much. Why is it something that I would want to add to my portfolio versus like I got a buddy who his goal is to be a minority owner. So basically like take a position like you guys are, but just himself at some point in time when he gets enough money. So so if I don't have that, what's
so
the
here,
the
I
look
think
for me like?
here's something that I would look at if I'm looking to invest into diversify my portfolio, right? I would look at, you know, sports in the last 20 years has grown over let's say 13% annually. If you combine it, right, that's what the RASFI index like kind of shows. If you compare that to equities, it beats the U.S. equity market, right? And it's it's resilient. It's resilient to wars. It's resilient to depression. It's resilient to pretty much almost anything because it's something that people are still willing to pay, willing to look at. It's like a place where people can get their minds out of reality, right? So as a diversifier, like I think, looking at the growth, how it's happened in the last 20 years, and I would diversify my portfolio just based on that. And then as you were saying, when it comes to like what do I expect to invest, in a minority, just to give you an example, it's an asset class that for many is becoming to be a newly an institutional asset class, but if I think it was a JP Morgan annual conference that announced that 60% of their ultra high net worth individuals had a stake in one of the major sports leagues, clubs, sorry, yeah, franchises in the US or an indirect or something. So it's part of a portfolio that wealth is looking to get. And also because it's very inaccessible. So in that sense, it becomes a place where you can actually, have something that will be traded at a higher value in the future, right? As long as it continues to grow at the pace that it's growing or
Yeah.
2%.
No, exactly. I think, it is, when you look at kind of the S&P 500, it's almost totally not correlated. So correlation, I think, is at zero point 0.2. So you're looking at the second lowest correlation for a major asset class. So in terms of like a diversifier, it's clear that, it offers something different. I guess, your point on, why would my friend not go and invest kind of individually and own a minority stake in a European football club? The investable sphere of clubs that are available is obviously very small. There are a limited number of clubs out there, and clubs that are on the market at a given time is there are a lot on the market, but that you would actually consider really truly investable, where you're going to get the returns that you're looking for, and your all your underwriting criteria matches. So actually, what a lot of kind of the football and I guess sports ecosystem in Europe relies on is that kind of proprietary access. A lot of deals never make it to the market. So I guess, where we're in a fortunate position is kind of through our story of having kind of 30 years of experience as kind of a multi-asset manager, and obviously having a presence across Europe over the last 7 years in venture and in tech and in the number of deals that we've done. It's really put us in a unique position where we can kind of attack live deals much before they get to kind of open market. And if you consider our portfolio, our two major European assets in Atlético Madrid and in Leeds United, they were kind of both sourced from existing relationships where it wasn't really an option or an available asset to the open market. So yeah, it all comes down to access. It all comes down to partnerships and relationships too.
And I think for us, just adding to what James is saying here, it's we don't compete with any of the big guys in this sense. We're actually a good partner. We're an institutional type minority partner that can come in, can add value in different ways, and at the same time understands how to place a transaction properly. Because you have, people like Apollo, who did led the transaction with Atlético Madrid. You have RedBird, you have Sixth Street, you have major institutional capital coming in, and their approach is different. It's like I'm putting one big bet, one large big bet, and then you can maybe access investment into that big bet through their funds, right? But you're not going directly. So I think, as James was saying, getting access to that to be able to be a minority stake is a very unique proposition at an individual, at a retail level, let's say.
I have a question on Atletico. Well, not on Atletico Madrid because I don't know how much you guys can talk about that. But if we take, let's say, Barcelona, okay? Um, Obviously rivalries, but if you take Barcelona for a sec and you look at that as an investment, and I'd assume that it'd be a very stable, expensive investment to make, but it's very stable. What do investors gain for investing in a team like Barcelona? You know,
So,
there's the risk is lower, but like what is that also 15-20% higher like return like when you think annualized returns, or is it lower,
It,
higher?
it really depends on the asset and where it is. I think Real Madrid right now is valued at over, I would say it's over 5.2, 5.3 billion dollars. Barcelona is probably around 3 point
So,
something,
but when you look at
4.
like historically, how much were they worth 5 years ago?
But the thing with these clubs, and this is let's say for us underwriting Atlético Madrid, and one of the reasons we loved it so much as well, is because those two clubs, or the one of the biggest franchises in the world, they're owned by the fans. You cannot invest in them. So they're always in different financial and economic situations, right? And they're growing at a different pace because they don't have to report to, you know, they don't have to report their numbers to anyone looking to make a benefit financially, right? When it comes
But
to
yeah,
Atlético, it's a private entity. So that one's a business in that sense. You can invest in it. So this is what you see in leagues across the board. So for us, when we talk about the scarcity in these type of products, is you'll find a situation like Spain and other countries as well, where you have the top three teams in the league that everyone knows around the world. The top two you can't invest in. And then the third one, you can, right? The getting into is hard. But then there's a fourth and the fifth, and then the ladder goes down, and the price goes down as well.
But
But
the
if
best
you
clubs, but the best clubs, if you look at, let's just say Arsenal and PSG, right? Finals, right? Are they owned by the fans or owned by, private equity?
what club by club basis. In Spain, the top two are the top two in terms of value are Barcelona and Real Madrid. They're owned by the fans. There's obviously private investment as well, but you can't take kind of full
No,
ownership
for
of the
sure.
club.
I'm just trying to understand a low risk team. What
Yeah.
type of potential returns would you expect for a low risk team
So I
versus,
guess
yeah.
yeah, I guess the top European valuations since I guess over the last 2 decades have increased, a range of 5 to 15 times multiple in the last 20 years. You'll see kind of, I guess, the way we underwrite our assets, if you want to kind of take the elite versus the transformational. On our elite, you'd probably, yeah, on our transformational clubs, you'd probably expect 2 times growth than you'd expect on our elite assets, just due to the kind of under monetization of the fan base, due to the kind of lack of professionalization that's in the club. Like these structures are already in place in the elite clubs, but kind of that's where you have your kind of real estate angle. You have your kind of if you're doing a big real estate project, for example, you're increasing your hospitality, you're increasing your stadiums are going from just match day stadiums to having maybe concerts every year. So for example, in Atletico Madrid, you have a whole host of concerts that are kind of totally separate income to traditional football income, but they still sit within the top line. So, it's a slightly different structure, but yeah, naturally, obviously, your transformational clubs are going to be, if dealt with well, they're going to have a much higher kind of
And I
profit.
would look at it as how we see it too. Like it's a moving target in that sense. Like if you're looking to come into a position right now, let's say a more elite club, I can't, ballpark, I'd say you're probably looking to underwrite, a 10 to 15. Um, or maybe a little bit less. Uh, but there are opportunities where you underwrite 15 to 20. Those are the things that we're looking at. Then there are opportunities a little bit higher. But uh, the the thing is, it's a moving target. So part of the reason why all this institutional capital is coming in right now is there's a big gap between how, let's say, sports in the US are trading compared to European sports. Give you an example, I think NFL teams or NBA teams trade at a 7 to 10x multiple on revenue versus the football clubs are trading, the elite ones are trading 3 to 5x, right? So the multiple expansion, there's a gap there that's going to be filled. And we believe in this super cycle that we're in. This is why we're doing this now. There's a super cycle that we talk in terms of soccer and sports. It's just like, the three World Cup super cycle. It's you have the US World Cup, North America with Canada and Mexico this year. You have in 4 years in 2030, you have Spain, Portugal, Morocco, and then in 2034, you have Saudi Arabia. Regions where we believe that institutional capital will continue to grow, fan base will continue to expand. Every time there's a World Cup, the sport grows, right? In these markets, it'll just push it higher. So we believe that, it's more of a question when you want to get in. And that's why we believe that right now is the time to get in if you want to underwrite at a certain level. The more you wait, you're probably going to be underwriting at different levels. Um, but that's just how we see the growth as a whole as a market. And I think if you see the institutional movement that's been going on from the US to Europe, that's what's picking up, right? That's what's picking up, and we believe there's much more institutional capital coming later on, right? But then again, a lot of the let's say a lot of the cards are already dealt, right? So you have to be thinking about how to combine strategies to get the return profiles that you want.
But let's talk about risks for a second, uh, for this type of industry. What do you guys think, or how do you underwrite that?
So I think, let's say, risk is real everywhere, right? At the end of the day, this is somewhat of an illiquid product. No, it like we do it in the secondary market. That's part of why the value grows so much. But a transaction doesn't happen overnight. You can't just go. It's not a liquid product. You just go and sell in 2 seconds, right? Um, but I think mainly the risks is they tend to be more tied into, let's say, sporting performance or regulatory, which things that let's say in our position we monitor and we diversify very well. That's why we're not investing in just one country or one league. We're investing in different leagues, in different clubs in different leagues. Understanding the regulation, and the improvement it's had in the past, where it is, and how it's opening up space for growth. That's something that we look very important that we really double click on. And James mentioned our minority stake positions, how they fit depending on the criteria of each country, because we don't want to ever be in a position of a fire sale, which has happened to other people who've, let's say, passed that regulation where they were like, all right, they owned more than what they were allowed in two teams that ended up meeting in a league.
Exactly. So there's like exactly the regulatory risk of having, I guess, the multi-club structure is you can have, say, ownership of two clubs, and if both clubs perform well, as was the case with Igor Holdings, who was as John Textor's group, who had a position in Crystal Palace and also Lyon. They kind of both clubs performed well in that year and went into the Europa League, which is kind of like the European competition, outside of your domestic league. And as a result of both teams going into the same competition, Crystal Palace actually got demoted to the third level of kind of European competition, which obviously from a stakeholder perspective caused a whole host of issues because it was the first time Crystal Palace got kind of pushed into, well, actually qualified for the Europa League. So there's definitely a regulatory angle. I guess, you know, in terms of, I guess, the counter-cyclical risk, every commodity, every equity has its own risk. I guess what we've seen is kind of over the last 20 years, the rebound of sports assets has been much quicker and much more resilient to kind of wider macroeconomic risks that was seen through kind of in the 2008 crisis. It was seen in COVID. The bounce back was much quicker with sports compared to traditional asset classes. And then thirdly, I guess looking forward, one of the big risks that I'm sure you talk about on this podcast a lot is, every week AI is changing the dynamic and it's changing how you view your portfolio and what you're considering investing in. And I guess, although you can't say anything's AI proof, when you look at sports as a whole and you think about what AI can do to kind of the live experience, it's really an enhancer rather than I guess, a replacer. So it really sophisticates the user experience. It can streamline costs for those operating football clubs, but the actual core product is going to remain. So, there are risks. There's obviously the sporting risk of being demoted. You've got other risks which you're exposed to as you would be in any other business. But then there's also quite a few kind of macro trends that really kind of put football in a kind of a more stable category relative to other asset classes. And as we said, the government's reforms that are kind of being widely implemented around clubs is also creating kind of a higher level of sophistication, which is giving investors more confidence, which is why we're seeing an increased number of transactions involving private, institutional, and private equity.
Yeah, I think first of all, your point on AI and its effect on sports in general, I think, when you think about AI moving forward, experiences are one of those things that are AI resilient. And this is one of those things that I think, yeah, 100%. People are always going to want to watch sports. The more time they have, the more sports they're going to watch. I think one of those black swan events like a pandemic sounds to me like that's the biggest risk. Obviously, maybe it's low chances, but I assume like that can destroy the industry.
Yeah, I
Or
mean, it had a challenging effect. You obviously had no fans in stadiums. You had no, revenue streams were obviously massively impacted. But football was one of the first things to come back in Europe. So when you weren't allowed to kind of go outside throughout COVID, the only kind of professions were kind of like the key professions where you're allowed to kind of, your doctors, your post, etc., your food, and then the kind of the fourth major outlet was football. And football was the only sport which kind of went back on screens. So I guess, yeah, there's kind of there are the risks of kind of, the Armageddon happening again. But you also, I guess, have, society in Europe is very reliant on football being shown. If you go to any community, if you go to any city in Europe and you ask someone on the street, like, do you support a football team? You're going to have a resounding response. And that kind of gives kind of this natural layer of protection because it's a cultural asset. I always say to kind of people interested in the industry, wherever you're from, what business in your area do you think will be there in 10 years? And if you go to Barcelona, for example, and you ask people, from the area, what do you think is going to be here in 10 years? I think you get a pretty strong result saying, actually, the football club is it's going to be here and it's going to be in better condition than it was 10 years ago.
yeah. All right, guys, we're at time here, but any questions from anyone or any last notes you guys want to share about the industry? Mike, you have anything?
No, and I don't know if this call was meant to get into that. I don't understand the fund process and structure necessarily that much. I don't know if you want to talk through that, or if this was more of an overview of like investing in football.
I think we try to just have this more high level about investing in sports. But if you guys want to spend a few minutes going into sort of how it's structured, and if you can, I don't know if you guys can talk about that or not, but yeah, feel free. Why not?
I guess, and then a follow-up question, just, curious, like I said, I have a friend who has a stretch goal to become rich enough that he can buy, a minority ownership in a European soccer team and sort of like be involved in that kind of thing. Like, is that what's it take? Well, like what kind of check size do you need to show up with, and how do you even get into that mix if some, wealthy individual decides that's a goal of theirs to own something?
And do you have access to the box if you do invest in stuff like that? That's even more interesting, like box tickets.
There, there's definitely perks, I gotta say, but you definitely get to enjoy a lot of the experience. But let's say if I were talking to your friend, right? I would say it really it's really hard to answer a question how much you're going to have to spend to get that 5% because it really depends on where you want to invest, what club, what league, what country, what club, what division, right? If you wanted to invest in a, let's say, elite club that's already trading at plus billion in let's say an enterprise value, then you kind of see if he wants to have a 1 to 5% stake, right? What the value is there. But then you have other assets that can trade around, let's say, from 40 to 100 to 400 million in value. So there is accessibility. How can you get there? Uh, there are football transactions happening all the time. I think what really separates sometimes the desire of owning the asset itself than actually underwriting is is you know football is still for many or can be a trophy asset, right? So you can buy a club or you can buy part of a club. Is it going to give you a financial return? It really depends on where you underwrite, but you can definitely access anything in the market if you actually weren't willing to pay for it. So in this sense, it's more like depending on what he wants, and if it's much more of an emotional investment and a long-term goal of his, then he can definitely tap into something where he probably won't. Depends if he does it carefully, won't lose value, but he might not be able to attract much value as he could in other places. Or unless he gets in a transformational club in country where he gets involved and he sees growth.
Okay.
Do you guys want to give high level about the fund then? If you already asked, Mike, that you guys are raising for, or you guys can't talk about that? That's an
Yeah,
NDA.
no, we can. Do you want to go ahead, Stephen? Or
No, I mean, we we can't really get into specifics of the fund, but let's say high level for us, we have a 150 to 200 million strategy to invest in 7 to 8 clubs, where 65 to 75% are going to be concentrated in these elite clubs that we're talking about, where we have minority stakes with institutional partners involved, and the other 35 to 25% is going to be concentrated in these transformational assets where we can actually help increase the value and create a better alpha. So we sit at a really good position where how we view it is we want to be exposed to the sport. We want to be exposed to the growth in the industry, but we want to do it at a concentrated level when it comes to investing in particular assets that fit in underwriting criteria of non-dependability in football performance to actually get a revenue, to get a multiple, not dependent on their football trading as the main source of income of the sport, but something that has following, big ticketing value, commercial value, real estate behind it. So that's a bit, I guess what we can talk about the fund in that level.
So yeah, we have three clubs of our kind of 7, 8 already. And like in terms of deal flow, we're seeing a lot of opportunities. It's just, as Stephen said, we have a very precise investment kind of underwriting criteria. So there's a lot of opportunities out there. It just depends kind of what you're looking for and how you want to engage with the market, really.
So Mike's friend has a question. If you invest in that, do you get access to the club itself? Can you go to games and stuff like that? Special perks or not really?
It depends on the size of the club and depends with your relationships with the owners. But yeah, no, there's perks. There's perks. You have a constant dialogue with the partners which you invest with, and obviously, the more they like you, the more likely you're going to be invited. So,
So
uh,
the idea is that, I mean, at the end of the day, the something that we love about investing in experiences and particularly in football is that it's an investment that we see the growth. We're very bullish on it. We're looking for the return. We want to share the return, but we also enjoy it. And it's probably one of the only investments outside of other few things that we have in technology that we get to enjoy the investment at a different level, compared to anything else than just looking at how it's performing, right? So in that sense,
much more
um,
tangible.
yeah, it's very
Mm.
tangible.
Well, for the LP, all the LP cares about is the returns and maybe some perks, right? That's all that matters. All the
That's
rest.
what matters.
They become
Um,
fans. They become fans.
yeah. All right, guys, this has been awesome. I really appreciate you guys coming on. For everyone else who joined, thank you for joining. I'm going to share the recording after this. And until next time, hey, everyone, keep investing smart, okay? Don't make stupid decisions. See y'all. Thanks.
Thank you all.
Thanks.